Good morning, traders, and welcome to this special edition of the Pirate Traders live stream. We are live on the public YouTube. It's the day before Thanksgiving, so I thought I'd do something this morning. I would jump on the archive and go watch the day before Thanksgiving from last year, see how that played out, and maybe that might give me some insights to carry forward to today. Well, then I noticed I took the entire week of Thanksgiving off last year. So then I was like, wait a second, why did I do that? So I went back and found the last few day before Thanksgivings from the years prior to that. I've got 2021 and 2022 day before Thanksgivings, both absolute nightmare of a day to trade. Both would be described as days where the market was just very, very tricky, doing totally different things on each of those 2 days, but just very tricky days. So Thanksgiving 3 years ago, the market trended higher in the morning, got cessation, went nowhere for 2 hours, broke higher, got cessation again, started to break higher again, and then liquidated at the end of the day, all the way back down to the initial balance. Okay, so every step of the way, the morning would have been easy up into the F period, but you wouldn't have gotten much for it because there's your initial balance high, there's your cessation level. You know, they were only 10 points apart. So you wouldn't have made that much money on that day, and it would have been a very tricky read with multiple new breakouts and multiple cessations. And then the next year in 2022, the market just started to trend higher, instantly ran out of steam, reversed all the way back down to the low, only to V-shape reverse right back up to the high, make it look like it's going to break higher right before the end of the day, and then liquidate back in for the close. So both of the day before Thanksgiving from 2 years ago and 3 years ago were nightmares of days. And I remembered this last year, so I took the whole week off. Well, I didn't do it this year. I'm here and I got to make some money. I got bills to pay. So I am predicting we are going to have a choppy, confusing day no matter what happens. Whether we trend up, down, sideways, no matter what goes on today, I just think the way the market is going to move is going to be very, very tricky. The reason for that is most of the larger players aren't going to be participating today. They're, heading to their vacation homes to in the Alps or I don't know, wherever they live, and, getting ready to spend Thanksgiving with their family. So I suspect today is going to be a very confusing day, a very choppy day, probably not a day to fall in love with trades, a day to take profits quickly and look to re-enter. But all of that being said, what do I think is going to happen today? Okay. I am bullish on the market. We still have momentum. Anyone that's been following along in the brigade streams for the last week knows. Last week, we called for that breakout of the previous balance area. That has led to excess, meaning from the breakout, we have continued each day to make higher highs and higher lows and move value higher each day. That continued into yesterday, which tells us, that alone tells us that the market still has momentum, that it doesn't need a pullback yet. It's able to keep moving to higher prices and then bring in new buyers and just keep moving to higher prices again and bring in new buyers. It doesn't need a pullback. However, one nuanced piece of information that is worth keeping in mind is that we had a spike up at the end of the day yesterday. That is very bullish to see. The least bullish scenario after a spike, again, not bearish. Bearish is the wrong word, just least bullish, is opening below that spike, okay, which is what happened here today. So that tells us bigger picture on the market. We don't need to get below yesterday's low. We still have momentum. The higher probability is getting above yesterday's high, but that we may need to spend some time chopping sideways because we don't quite have the momentum right at the market open, which we would have if we opened in the spike up. So I'm looking for a choppy sideways morning inside the overnight range. The number one focus for me today, what is probably the most interesting potential trade, is a look below and fail of this overnight low. I could see the market spending some time chopping around here, convincing everyone that it's going to break lower, and then it just barely pokes down there and then versus right back up to make new all-time highs. So I'll be keeping a very close eye on this overnight, or very close eye on this overnight low. If we get down there, that is around 60.25. Okay. A reversal at that level, a look below that fails, would be very bullish. Obviously, if we got new selling below there, that would be less bullish to see. So all in all, I would describe myself as neutral to bullish today, expecting that at some point we will make a higher high and will only be convinced otherwise if we get new selling below the overnight low. And as I said, I suspect it's going to be a tricky one. Maybe it starts to trend and then gets weird. Maybe it rotates for a while and never gives us any trend. But whatever happens, I'm not falling in love with trades today. So I'd love to hear from you guys. Where do you think the market is going today with that context in mind? We've got momentum on the daily, but we did not open in the spike today. So that's a sign that momentum is starting to run out. We've got a day before Thanksgiving where a lot of big players are going to be gone. So it's just bots shoving the market around to take out stops everywhere they can find them. What do you think is going to happen today? Do you think the market is going to go up, down, or sideways? Let me know in the survey. I sure would appreciate it. And last request, I promise, if you have not yet, please smash that like button. And if you're new to the channel, subscribe to the channel. In particular, those likes are very important because we're on the public YouTube. The more of you, so there's 68 people watching right now, the closer I can get to 68 likes, the more new people the YouTube algorithm will show this video to. So if we want to grow this community and bring some new people in, we all got to participate and smash that thumbs up. Also, if you can, if you dare, let me know where you think the market's going today. Up, down, or sideways. Vote now or forever hold your peace. Good morning to Alyssa. Happy Thanksgiving to you. Will is here. Nap in the house. He says we got some numbers, some PMI at 945, PCE and pending home sales at 10. We'll look out for some volatility there and there. Pavel is with us. Good morning. RK is here. RK says tofurkey for me. Tofu turkey? I would try it. Red Pole in the house. Good morning to you. Design Knob is here. He says NQ crapped the bed. NQ crapped the bed. Ooh, fair statement. So NQ in a different scenario than the ES, right? It has had some momentum to the upside, but it has never really had clear momentum to the upside. Like the ES has had crystal clear momentum to the upside. Why do I say that? Well, for example, 2 days ago, you made a higher high and a higher low, right? But value was in the exact same place it has been the last few days. So technically it's a sign of momentum, but not strong sign. Same thing with yesterday's range. Completely inside today's range. Value was slightly higher, so it's a little bit of momentum. But the fact that the day stayed completely inside the previous day's range tells you that it's just not strong momentum. And then here you go this morning. You're now making a lower low on the daily, which is the equivalent in trend terms of shitting the bed. That's the sign you don't have the momentum to keep going up. So that increases the odds in my mind that the NQ is probably going to trade between 20,750 and 21,000. You know, that general area. We're likely to push up into yesterday's range, get smacked right back down, pull down into this range from 2 days ago, get pulled right back up. So I probably should have finished off the survey before I said this, but the NQ looks like it's going to rotate today. All right, so the survey says that 44% of you think the market is going up. Wow. This is so exact, this survey. Now, if it had only been like 4 people that voted, that'd be one thing. But 43 of you voted, and we still had exactly 44% up, exactly 44% sideways, and only 11% down. You guys know what that means. Red day. If everyone's convinced we're going sideways to up, we're going down. All right. So anyway, NQ, that is the first signal that we can get to not at all be bullish on the NQ. The high is weak. I do think we will come back up through the high at some point today and spend some time grinding inside yesterday's range. But for now, it's looking neutral to me. Let's jump back on the ES and see. Same thing there. Okay. So they just tried in the A period to poke up into that area where the spike up was yesterday. Instantly ran out of steam, came right back down. So both markets are talking sideways. Choppy, uncertainty, at least for now. Arjun is here. Good morning to you. Willie T in the house. John H. Hi, y'all. David is here. Welcome. Red Pool says, it seems like there's a chance in favor of moving up. However, the NQ trades in the lower end of the 1125 range. I'd expect a sideways day for the ES. I agree. I suspect the ES at some point today will make a higher high on the daily. We'll get above 44. I'm not convinced it'll do much more than that, but we'll just have to wait and see. Like I said, when I go back and I look at the last two Thanksgivings, or day before Thanksgiving, it seems to me like today would be something like look below and fail the overnight low, immediately go make a new all-time high, spend 2 or 3 hours grinding around at the all-time high, reverse right back in and close at the opening price. Like, it's going to be that kind of day. So I'm cautious on both sides. Sook says, good morning, Pirates. Feels like it's Friday. It is Friday to me. Those of you that are in the brigade, I mentioned in the email this morning, in case you missed it, I will not be streaming tomorrow or Friday. So we will be back together on Monday. Monday. It'll be fine. Monday. Good morning to Casey. Welcome. RK says futures closed tomorrow except Globlex. Yeah, it's one of those weird days where they're open for a few hours, but that's it. But the stock market will be closed. And so remember, if you're an ES day trader, you're basically trading the US stock market is what you're doing. So if the market is closed, the futures will be very hard to read. There'll be a lot of shenanigans and probably go nowhere. Oh boy in the house. Welcome. We got 84 people hanging out. Only 42 likes. I bet you if I could get the 42 of you that have not hit the like button to hit it, we could get more than 100 people inside this room. More than 100 people to experience the pre-Thanksgiving chop together. Come on, get after that like button. Let's smash it. Smash it real good, dude. David says, do you ever look at the full session profiles? Do I ever look at the full session profile? So the way that I'm looking at the chart, I'm building out of a sessions profile each day. If you're asking whether I go back and look at previous days, yes, I absolutely do. So when I'm zoomed out and I'm looking at this chart, I keep the last couple of weeks split out where I'm only where I can see both the regular trading hours and the overnight sessions. I don't ever combine those two together because to me, they're totally different things. But after a few weeks of data, if I'm going back further than that, I don't even include overnights. So to me, a session's worth of data is just the regular trading hours. And of course, I'm always looking at those old ones. So it will be like whenever I need information. So for example, you know, the market's coming down in here. On this day, I'm probably scrolled back over looking at what happened on these days for levels of interest. Where are there weak references that need repair? You know, where are there support and resistance levels? Stuff like that. So I go back and look at previous profiles for that when needed. But right now, the only thing that matters to me about the previous profile is the previous day's low. As long as we're above that, it's bullish on a daily. You heard? We're in a chop zone. David says, yeah, I mean, overnight profiles. Yeah. So to me, the reason I differentiate the regular trading hours from the overnight is that to me, they are just two completely different markets that function completely differently from one another. One is not better than the other. One is not more important than the other. One isn't more likely to get follow through or anything like that. They're just separate. One market is often doing one thing and then the other market is doing another. So one market might be balancing, like the overnight might balance all night long, and then we might trend in the regular trading hours or vice versa. We may trend in the regular trading hours and then they just balance all night. So they're separate markets. That's why I keep them separate. Knapp says, this Thanksgiving, though, the market is hyped up on post-election fumes. What does that mean? Does that mean more volatility, less volatility? More positive price pressure? Could be true. Could be true. But like I said, looking at the last two times, not last year, but the 2 years prior to that, both of those were extremely bot-driven days where the market seemed like it was doing something and then it reversed and started doing exactly the opposite. Seemed like it was doing something, reversed and did exactly the opposite. Seemed like it was doing something. Both of those charts that I started with this morning were like that. Very tough days for trading. Okay. Market starts trending up, instantly runs out of steam, instantly trends down, instantly looks below the initial balance low, starts trending back up, then has this one massive candle where it basically completely engulfs the entire day's range, pushes back up to the high of the day, reverses back down again. That's a tricky day. Like each step of that is like, oh man, this is a nightmare. What is this market doing? And then I look at the year before it and it was the same thing. Good trend into the D period. And then just a nightmare of a market. Cessation, breaks higher, cessation, breaks higher, completely retraces. So regardless of the fact that we just had an election, I think it's going to be a crazy, weird day like that. Because the bots are in control. Because the big boys have already begun their vacation. I also want to use this as an opportunity to remind everyone, if you're going to sign up for the workshop in January, the Mastery of Markets and Minds workshop, it'll be the last one I do for a while. So this will be, your best chance if you're wanting to learn how I trade. That discount, that Thanksgiving promo, only lasts until Sunday. So you got to sign up between now and Saturday to get that extra 20% off, which is the cheapest you will be able to buy it. Food for thought. If you are interested in joining, just head to markets, plural, marketsandmind.com. Scroll on down. Click on my beautiful face. Add it to your cart. And then just type in Thanksgiving. Apply that coupon and you are ready to go. You are out the door for $300. $300 to completely revolutionize your approach to trading. $300 to stop the losses and start stacking the gains. $300 to hear me sing a lot of random shit. Come on, get after it. If you're going to sign up, now is the time. Design Knob says 300 clams. 300 big ones, No, but it really is ridiculous that for $300, I will basically offer a college level course on trading. First lesson, being stuck in a chop zone. We're in a chop zone. Scott says, I was a C student in college. Well, listen, that's all you need. It's like that old joke. What do you call the guy who graduated medical school lowest in his class? Worst grades in the entire graduating class. What do you call him? Doctor. Just got to get through. Design Knob says, second lesson, the legend of the deer. So if you guys don't know this, the NQ is actually deer that have T-Rex arms for arms and machine guns strapped to their heads. They're the deer. They're the NQ. Don't ask questions. John says he's met some of those doctors, some of those bottom of their class. Oh, they're out there. They're poking people right now. Boy, this must be just about the most exciting first half an hour of trade we've ever had. I mean, just look at it go. All right, so we are losing a lot of liquidity here for the numbers coming out at 10 a.m. Let's see if that can break us out of here, get us some movement. Or do we just get more chop? Malcolm says, highly recommend Charles's course. I've taken it twice, 2 years apart. Both were extremely beneficial. Information updated. I've been trading for 12 years, and some of my original mentors have died. Some I wish had died before I paid them. Charles has the best training on the internet. Do yourself a favor and invest in the education. 400 level college education for less than 1 credit at a uni. It's true. Thank you, brother. Appreciate you. That is the goal of the course. You know, when I was learning to trade, I had to take dozens of different courses from different people, and they all just taught bits and pieces, you know, teach you this setup, teach you how to read this particular tool, teach you this or that about psychology, but nothing was all encompassing. So I created the Mastery of Markets and Minds workshop to teach everything all in one course for one low price. And that price is the lowest it can be till Sunday with promo code Thanksgiving. All right, market creating a poor low, increasing the odds we are going to break lower and likely test the overnight low at 60.24. What happens there will give us insights to carry forward. Do we look below and fail the overnight low, or do we get new selling? Let's see what happens. Cog says he would describe it as Jim Dalton inspired with a focus on modern developments. I'll take it. Thank you, sir. John says the numbers were a nothing burger, and the market agrees. Doing nothing. Casey says, I use Tradeovate, a web-based platform. Will your training include getting software not available on a web platform? So I will teach, using the software that I use. So I'll be using Window Trader for Market Profile over here on the left. I'll be using Bookmap for Bookmap over here on the right. And I'll be using Thinkorswim for the market internals. You don't have to use any of these. All of these services exist through other providers, some internet-based, some software you download on your computer, some you have to pay for, some which are free, some which are included with, a certain brokerage, some which are not. So the concepts are what's important, not the software. What are we reading in the software? What are we taking away from it? How do we use it? But you can always find an option that is cheap, free, available in your country, whatever the case may be. Thank you. You shot nobody. Thank God. Don't shoot anybody. Welcome, welcome. OG says, come on, Charles, tell your market maker friends to press the up or down buttons and not the right and left buttons. Boy, I wish I had a number I could call when the market was stuck in an area and say, just move it. I don't care if it's up or down, just move it. Boy, I'd be pushing that button all the time. Thank you, OG. Appreciate you. David A says, TradingView has TPO charts and it's on sale at the moment. Probably better than Trade of Eights. Yeah, I have not tried TradingView's TPO charts yet, but they do have like a big sale going on, like 40% off for Black Friday. You shot nobody says, just in case anyone else is wondering, he's like, I'm not wondering, just if anybody else is wondering, how long is the college credit worthy course? 2 weeks, 4 hours a day, 5 days a week for 2 weeks. Generally the first 3 hours or so is a lecture. And then the last hour is like watching live markets, talking about things, answering questions. But yeah, the full outline is available on the website as well. If you go to the tab and click workshop, you can see the full schedule. So day one is the tools, market profile, bookmap, internals, then the path to profitability. The path to profitability is basically just the process you have to go through from beginner to making a living as a trader. There's an entire process, step by step by step, you have to go through. It's not a direct line. So that's what the path to profitability is teaching the process you have to go through to reach success. The two-way auction process is understanding market behaviors and how I read the market. I read it as an auction process. Day 4, bots, weakness, trends, and rotation is just a deeper dive into that auction process on a shorter time frame. Then thinking in probabilities, that is learning to think like a computer, not like a human. Stop thinking like a human. Stop using your emotions. Stop doing what feels right and start doing what has a statistical probability of working most of the time and nothing else. Day 6 is developing edge, and that's where I teach all my trading setups, how I choose when to trade, where I put my entries, where I put my stops, so on and so forth, the name of all my different setups, and how I enter those trades. Day 7 is technical versus emotional problems. When you're trying to grow as a trader and develop your skill set, differentiating between, are these technical problems in how I'm reading a chart, or are these emotional problems in how my brain is fucking with me? That's what that day is all about. Then habits and routines that you can create in your life and in your trading that will bring you better results consistently. Mindset is day 9. And then day 10 is review and compound, where we go back through everything and make sure it's all deeply embedded in your brain parts. You can sign up now, use that promo code to save some money. If you change your mind between now and the beginning of the course, you can email me and I'll give you your money back. Once you take the course and it's over, you can watch all the videos for up to a year. So if you can't be there live during the day, you can watch them later on at night or a couple weeks later or whatever. I wish I had more to talk about than the course, but honestly, the market ain't doing nothing. What you doing, market? Nothing. So on the conspiracy theory that I have that the market is going to be incredibly difficult to read today, that it is completely bot driven and that they will just do whatever will squeeze the most traders, when they start a day with a tight balancing range, what are they probably setting up to do? To make a big move out of here at some point or another, or to start a big move, fake out and reverse. So again, I am obsessively watching this overnight low for a potential look below and fail. I think that could be an excellent opportunity today. To come down here to just spend just a little bit of time, just enough to get everyone short, and then whoosh, right back up. The chop continues. RK says, no matter what you trade, Charles's course helps you put your stuff together. That's the goal. Let's put your stuff together. The stuff in your brain parts. David says, what about if you have a different TPO? I use Sierra chart. Does that matter? No, it does not. So what it looks like on your screen doesn't matter, right? Some TPO charts use letters like mine, A, B, C, D. Some use symbols, little squares or little circles. None of that matters, right? All that matters is you can see what level on the price axis the market is spending time, which is what the TPO show you. Here's an area where we spent time last night. Here's an area where we spent time last night. And where is the volume? So far today, most of the volume right here. If you can see those things on the price axis, time and volume, that is all the information that you need. John George in the house, ahoy to you. 94 people hanging out, 59 likes. They said we couldn't get to 100 likes, and I said, yes, we can. It's Thanksgiving tomorrow. We can get to 100 likes, I said. These people enjoy the taste of fresh turkey. They'll push that thumbs up. John's with me. He says, yes, we can. David's like, come on, guys. Press the like button. You know you want to. We got 100 people hanging out. 64 likes. We can do it. I swear. All right, there's the repair of the poor low. Again, increasing the odds we're going to test the overnight low at 60.24. Looking for a reversal down there. Let's see what happens. Claudia says, I'm trying to sign up, but the checkout page doesn't show me the button to confirm all my information. Oh, no. If you can't figure it out, if there's some sort of glitch, you can just email me, and we'll help you figure that out. So just click on where it says proceed to checkout. Instead of clicking on PayPal or Venmo, click on proceed to checkout. It's not, it's black button, and you'll see all your info there. $200 says, hey, Charles, do you figure this Friday will also be a robot chop fest? Yes, I do. I think Friday is going to feel like today, which is why I just remembered this morning I took the whole week off last year, because I remembered before and after Thanksgiving it was annoyingly choppy. Okay, so both of the markets are at the area where I'm looking for a reversal. This morning on NQ, we talked about, a look below yesterday's low and a failure, a reversal right back up to the opening price, because the opening price on the NQ is weak and the market is in balance. Okay. And the same exact thing on the ES here. We are right at the overnight low. I really think there's a chance we get a look below and fail here, in which case both markets should be looking for one more little poke to the downside and then a reversal. So if we get a poke and more selling, well, then we'll become bearish. Let's see what happens. Still weak on the ES here at the low. 200 Dog says, damn, I've decided I'm going to take the rest of the week off. Otherwise, I'll be looking at a fully red week. Happy Thanksgiving, y'all. Happy Thanksgiving, 200 Dogs, to you and your pop. Yeah, nothing wrong with taking a break. Come back fresh on Monday. Plenty of money to be made then. Everybody will be feeling good. They'll have had a good weekend with the family. They'll be showing up to work Monday morning ready to make some money. This market will go somewhere. It'll do something. We got 104 people hanging out. Not much to talk about. Still trying to poke below this overnight low. Still waiting to see if we get a look below and fail. Any questions from the chat? I got to get those extra, 34 likes that I'm looking for today. So maybe you ask me a question that I'll say something interesting and then people will like me. Hit me in the chat. John George says, enjoy. Enjoy. I try. Design Knob says, laugh out loud, another bounce at the exact low on the ES. Design Knob, what does the laugh out loud come from? This is what bot-driven markets do. That's just normal. Exact reversals at exact levels. The A period high reversal exactly at yesterday's closing price. The B period high reversing exactly at the opening price. The B period low reversing exactly at the overnight low. We're going to get that all day long. The bots are in control. Big boys are home on vacation. Bots are in control. Bots are in control. Home on vacation. Bots are in control. Pucker Toot says, what platform do you trade on? I use TradingView to enter my trades, and I use AMP Futures as my broker for futures and Charles Schwab for options. Sook says, you probably already said the markets will be bouncing. What are the odds of that not happening? Well, when you're talking about odds, it's hard. It's hard to give like an exact number. Like how likely are we to continue lower and how likely are we to reverse back up? So first off, let me just completely remove NQ from the equation because that is a market that is balancing. It is in balance. There's no edge up or down on NQ. But ES does have an edge. It has momentum up. What does that tell us? It tells us the probability is greater that we will test yesterday's high than that we will test yesterday's low. That's just a market that has momentum on a daily time frame. It's trending. If it's trending up, it's more likely to test, the next day, it's more likely to test the previous day's high than it is to test the previous day's low. So that means there's a better probability the market will dip below the overnight low and reverse back up for the high. If you made me give you an actual statistical number, I would say it's like 60-40, maybe 65-35, something like that, in favor of a look below and fail. All right, well, there's your look below. Now let's see what happens. Do we get new selling here at the overnight low, which is bearish for continuation to the downside, or do we get no new selling in which case we're looking for a reversal right back up through the opening price. Right here, right now. Right here, right now. I'll be watching the ticks. Kevin says, finally, I think I understand the B high is weak because it coincides with the open. Yes. So on my computer, on the software I use for Window Trader, this is the closing price right here. This like green circle from yesterday. And this little green dot, that's the opening price for today. So A reversed at yesterday's closing price, B reversed at today's opening price. That just means a computer, beep, boop, beep, boop, was using exact references to enter those trades. Okay. So we're still dancing on the zero line. No clear signal yet if it's buyers, sellers. It looks more like buyers to me, but we don't have clarity just yet. And we left behind a set of single prints in the B period, looking to get backfilled. So again, that always gives us one of two pieces of information when we have a set of single prints like this. First piece of information, we're likely to try to come back to 27. But if that does not happen, right, if we don't come back for those single prints and the C period starts to one time frame lower, then it tells us exactly the opposite. It tells us we have momentum down and we're going to get continuation lower. So let's see what happens. To bounce or not to bounce. I swear it'll happen eventually. Okay, so the market is one time framing lower. That is bearish to see. And the fact that we have spent so much time and brought in so much volume below the overnight low is also a little bit bearish to see. But I'm not quite that bearish yet. I'm going to give this market just a few more seconds and see if the next move in the ticks is down or up. If the next move is down, then we're definitely getting follow through to the downside. If not, we may have just needed to make the low before we reverse and come back up. So leaning more bearish now, but waiting for one more push to confirm it. There it is. Okay. So the market is now one time framing lower. The target is yesterday's low, 60.11 to the downside. What will tell us we are wrong is if the market comes back up through the base of the B single prints down. So it can come all the way back up to 6,027 and be still bearish because of the amount of time and the amount of volume we've brought in below the overnight low. Comes back through 27, well, then it's not bearish, it's chop. But for now, the momentum is flipped, and we are looking for continuation to 60.11 to the downside. All right, so I'm going to say the exact same thing at yesterday's low that I said at the overnight low. There is always a chance that we're just going to poke below yesterday's low and then reverse and come back out. Much like the overnight low, if we continue to get new selling, if we get those pink candles and those ticks going lower below there, then we're looking for another large pullback in price. But first, we have to assume the reversal, because it is the higher probability. If we do get below yesterday's low now, which, like I said, that's what it looks like it's going to do, that shows us an end of the momentum on the daily time frame. So that means we will be going sideways for multiple days to come. This is not bearish to see, to say the least. I mean, not bullish to see. All right, so now we are looking to turn this into resistance, either the overnight low at 24 or the base of the single prints down, like I said, at 27. I know it seems strange to wait until we're down here to get bearish and then to be okay with the market coming all the way back up here and still being bearish. But I'm telling you, the probabilities have flipped that these sellers are now in control. So that means there's sellers waiting at resistance to smack the market down. Let's see what happens. Watching the ticks. John says, Charles, by the way, I was one of the 11%. Yeah, I forgot about that. Our survey today. Only 11% of you thought the market was going down. And then we went down. That means 89% of you were wrong. And I blame you guys. I'm just kidding. Yeah, Design Knob says 89% wrong thus far. I don't know. It's looking a little bearish to me. NQ already broke the previous day's low. ES, since we got below the overnight low, has done nothing but more business below the overnight low. More and more and more. And that ain't bullish. Not by a long shot. John George says, I blame those that didn't hit the like button. As do I, John George. But it's never too late for those people. We're trying to get to 100 likes. We got 107 people hanging out. So, if you're one of those people that hasn't hit the thumbs up yet, I just don't know what's stopping you. Now it feels like the right time. Willie T says the day is still young. Yeah, I hear you guys. I hear you. But for now, it's momentum down. When we get different information, then we can change our tune. Big Pun says, I see a lot of buy orders drop about 10 minutes ago. Are those mostly sells taking profits? I'm not sure exactly what you're referencing. Let me look at the book map here. Man, I don't know what is going on with Trader Map Lite. It ain't working today. Trader Map Lite took the day off. All right, so a bunch of liquidity hitting 10 minutes ago. Nothing's really jumping out at me right now about the order flow. But that's just because the bracket bot is kind of overwhelming everything. As far as are the buy orders that are jumping in taking profits, my guess is no. If I was short right now, why would I take profits inside yesterday's range? Right? Once you're below the overnight low and you get new selling, which we have, check, check. The highest probability is that you're heading to the previous day's low. So if you're going short, why take profits ahead of that? Why not wait to get to the previous day's low? So my guess is those are speculators that are looking for a bounce, but they're probably about to get slapped right in their little speculator face. 81 likes, 105 people hanging out. I'm telling you, we're going to do it today. Pre-Thanksgiving, we are going to break 100 likes. RK says an angel get its wings when you hit the like button. A fairy somewhere is brought back to life if you hit that like button. John says the chop pickpocket bot, nonsense in full effect. Yes, sir. As was expected today. I just realized I've been talking to myself on mute for the last 10 minutes. Cool. Cool. We got 89 people hanging out, 87 likes. Big Pun was saying that at 10:36 a.m. there were a bunch of longs that hit the market 6,000. Those were stops getting taken out and icebergs buying up those stops. So if we zoom in here on the Bookmap to right at 10:36, what you can see happening is they're taking out large chunks of stops. One individual player got taken out for 175 stops right here at 60.20. Another single player got taken out at 60.14 for another 244 stops. And wouldn't you know, 250 on an iceberg there, buying up those stops. 300 on an iceberg there, buying up those stops. So this is just day trading bots doing what day trading bots do. They figure out where the stops are. They poke down and take out those stops, using it as a chance to build liquidity the other direction. And they do it as long as they're going to do it. Maybe they'll do it the rest of the day. Maybe they'll do it for another hour. But they will keep doing it because that's what day trading bots do. They push up until they take out some stops from shorts. Then they push down until they take out some stops from longs. Then they push up till they take out some stops from shorts. And then here we go again, coming down to take out some stops from longs. And that's just the process it's going to go through all day long. And that's because the order book is so thin, because the big players have gone home for Thanksgiving and they're not sitting in front of the chart. So the bots can do whatever they want and no one's going to fight them. No one can outsize them. Knapp says the ticks are quite contrary. Yeah, we're getting a lot of push-pull between different markets today. So NQ is bearish. Let's take a look at the Russell. The Russell's bearish too. Neutral. And the Dow Jones is neutral to bullish. Yeah, so you just got, because the ticks are showing you the entire market, the entire Nasdaq, it's just the buying you're seeing is the buying in the Dow, not in the NQ or the ES. Chop City today. Chop in the city today. $90 likes, 111. I swear to God, guys, I'm going to beat this to death. We are getting to 100 likes. If you're holding out on us right now, just do it. Just push that like button. Let's get to 100 so we can celebrate and eat some turkey. It's turkey with gravy and mashed potatoes. We're 8 likes away from mashed potatoes, y'all. Big chunk of butter on top. Gravy over the top of everything. Little melted cheddar cheese. We're 7 likes away. Okay, so now the dynamic is changing. What did we talk about in the C period? When we printed the C, we left behind a set of single prints in the B. And so we said there's two ways to read those. First is kind of bullish because we need to backfill them. And if we don't, if we broke the B low without backfilling them, very bearish, that we're going to keep going. Well, the bearish one is what happened. It's identical here in the D period. Okay, so we got another set of single prints here in the D period, which end at 60.20. So the first order of business for the market should be to come back and backfill these single prints, in which case we'll be looking for resistance there at 60.20 or just above at 60.22. Okay. But if we immediately start to one time frame lower again, if the D period low gets below the C period low again, without backfilling, just like it did in the C period, those unfilled singles will be a sign of momentum lower. So let's see what happens. Now, all the momentum is over if we get above the C period high. That is what we call cessation of the trend. And when I, started the day today, I went back and I replayed the last couple of day before Thanksgivings that I traded. In both of them, the trend reversed very quickly. So sellers, if you want to get below yesterday's low, just do it. Just do it right now. Do it. And then push the like button because we're only 4 likes away, y'all. Come on now. All right, there's the test of yesterday's low. That's how low it can go. Okay, so now that we're at yesterday's low, this is again one of those places where the market might run out of steam to the downside. Okay, so now I'm going to talk about what I talked about in the B period, which is if we start to spend time below yesterday's low, below 60.11, and we start to bring in volume, we start to turn some candles pink like we did around 23 earlier, well, then we expect that momentum to continue to the downside, right? But if we just reverse right back up, kind of like we just did, and stay inside yesterday's range, now the longer we spend inside yesterday's range, the less bearish it is and the more likely for a reversal. So let's see what happens. Do we spend more time and bring in more volume above or below 60.11? The likes right now, the thumbs up on my channel are like, I'm so lonely. I'm lonely. I'm lonely and feeling so sad. It's only, no, somebody just undid a like. Oh no. I was 3 likes away from 100. Now I'm 4 likes away. I'm sorry I sang. I take it back. Guys, we got to get triple digits on those likes today. I know we can do it. We got 104 people hanging out. If you have not hit that thumbs up, you might be the one of 2 people that I need to make these triple digits happen in the likes. Kevin McKay, welcome, welcome. Happy to have you. Thank you for hitting that subscribe. If you haven't hit the like yet, please hit that. We're so close. We're so freaking close. Ooh, I can taste it. I can taste it in my mouth. Wham, wham, wham. Triple digits. Bow, 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 bow. 100 likes, y'all. We did it. Happy Thanksgiving. Happy Thanksgiving. Bow, bow. Man, it's been a while. It's been a long while since I got 100 likes during a live stream. I appreciate y'all. Thank you so very much. If I could, I'd give you all a slice of pumpkin pie. But, you know, it's the internet, so I can't do that. Okay, so things are getting less and less bearish by the moment. Why? Because we got below yesterday's low, but we did not spend a lot of time down there, right? We did not bring in a lot of volume. So absolutely, they still have the trend. The sellers are still in control. They can totally take it lower, but the more time and the more volume we bring in back inside yesterday's range, the more likely the momentum to the downside is over. The more likely they were just coming down here on a stop hunt. They got what they're going to get, and now we're heading right back up towards the opening price. So every minute that goes by and every new long that gets purchased inside yesterday's range, the more likely the momentum to the downside is coming to an end. We do still have an iceberg down there. That increases the odds slightly the market's going to come down for one more poke. But as I said, at this point, it's all about time and volume. The more time and volume above yesterday's low, the less bearish. The more time and volume below, the more bearish. And obviously, we are spending time and bringing in volume above. Cog says, I kind of like the idea of that pullback before all-time highs, bringing in stronger hands. So I agree with you as a theoretical idea, right? Because the market's been one time framing for quite a few days on the daily. You know, if we look at it here on the daily, we've been going straight up for a while, right? So it does feel like it would be good for the market to get a dip for that last final little move to the upside. That conceptual idea I agree with. I don't agree that that's what we're getting today. Today's bot-driven markets, there's no stronger hands buying anything. Stronger hands are on the helicopter on their way out to the Hamptons or whatever. So I think this is just bots. I don't think any of it will matter. I think regardless of what happens today, we start fresh on Monday. Kevin says, that's it for me, folks. I scratched out a couple of points, and it's time to call it. Happy Thanksgiving, everyone. Happy Thanksgiving to you, Kevin. Enjoy the day. Red Pole says, looking at yesterday from above the E period and certainly from the H period yesterday, the market looked like it was trying to auction upward. It didn't just look like it, my friend. It did. We had a spike up at the end of the day yesterday. So all day yesterday was just building tension for that move. Yeah, you started one time framing higher and then you got cessation, and then you basically just spent the whole day building up steam for what happened in the last hour. But if you're saying to yourself, well, how is this possible that they worked so hard to get that move up yesterday and then today we just completely retrace? Again, I just want to emphasize it's the market that we're trading today. This is not a real market. Nothing that happens today matters, right? None of it matters because it's not real traders trading it. It's just computers. For those computers, it turns out the way for them to get the most business to happen today was to poke down to yesterday's low, right? To squeeze all the buyers from the last few days, all that momentum. But they really didn't get much for it, did they? They didn't get much of a liquidation at the lows. So now what they're going to try to do is they're going to try to grind here, however long they need to grind, to get everyone intraday today to short because, oh no, lower lows, the world's coming to an end. And then they'll likely whipsaw it right back up. My guess is we're going to close today right about where we opened. And in the end, the market will have gone nowhere. But intraday, it can make moves just to squeeze the intraday players. And that's what I think is happening here. So it doesn't look like we're quite done with yesterday's low yet. But as I said, I'm not really convinced this market wants to continue to trend lower the rest of the day. I suspect there is support somewhere between 6,004 and the overnight low, 6,011. Somewhere between there is going to be support, and then we're going to reverse all the way back up to the opening price. But it does not look like we found that support just yet. One more poke. One more poke. Look at how inversed the ticks are from yesterday. Yesterday, price was fighting to stay up the whole day, fighting to stay higher, but the ticks were weak all day long, spending most of their time below the zero line. Today's exactly the opposite. Price is fighting to stay lower while the ticks are above. Interesting inverse there. So it tells us they're using this discount on stocks to buy. They're buying the dip on the stocks today. Red Pole says, yesterday with the two cessations, it made it tricky how to handle that. So this is something we've been talking about a lot lately. There's nothing we can do about the fact that we often get multiple cessations now. So for those that don't know, back in the day, we used to get a pretty clear thing that the market would do. It would open and it would do whatever it's going to do for the first hour of the day. We call that the initial balance. Whichever way it broke out of the initial balance, it would tend to trend. It would tend to go in a certain direction out of that initial balance. Whenever it would get what we call cessation of the trend, then it would be done for the day and it would go sideways the rest of the day. Well, that's ancient history. Nowadays, we can start to trend, get cessation, and completely reverse. We can start to trend, get cessation, and just keep trending. We can start to trend, get cessation, go nowhere for hours, break higher, get cessation again, go nowhere for hours, break higher, which is what happened yesterday. So what do I say to it? What I always think, which is like, nothing is set in stone anymore. Nothing is guaranteed. Go with whatever the information is telling you as long as it's still working. So yesterday was tricky in the second half of the day, but it wasn't impossible to read. It did feel like we were bringing in more and more and more buyers this whole time. It did feel like we were going to spike. It just took forever to actually get the move. But there was a lot in the tempo, in the volume, in the location of the reversals of the TPOs, the exact reversals. There was information in there that gave you an insight. It was building momentum to break higher. It just wasn't trending higher, which it doesn't do sometimes. One more poke. RK says, how many pages is the Markets and Minds handout up to now? Do you mean how many pages are all the presentations that I do? Oh, I couldn't even tell you. A lot. A lot. When I first started doing the workshop, most days the lecture was an hour and a half to like 2.5 hours. Now the lecture is like 3.5 hours almost every day because I've added so much to it. But that's what happens, right? You do a workshop, people ask questions, you go back and you say, "Oh, I didn't explain this right," because people kept asking questions about it. Let me go in and make some slides to explain that better. And then the next workshop, that thing makes more sense, so they understand it. So then they ask even newer, interesting questions. And then you're like, "Oh man, I didn't explain that. Let me make better slides for the next workshop." And it just gets better and better and better. One final reminder, if you are thinking about taking the workshop in January, the best deal you're going to get is signing up this week at Mastery of Markets in Mind with promo code Thanksgiving. All right, looking at the numbers, it looks like we are losing the chat. People are peeling away. They're saying, fuck this day. Let me get my Thanksgiving started early. I'm not giving up yet because I do still think there's a big opportunity for a reversal back up through the opening price. We just haven't made the low yet, right? The fact that the D period was able to get below yesterday's low, but not able to spend any time or bring in any volume below there, is a sign that there are buyers waiting. So the market still has momentum and it's still going down, which means we're going to get one more poke, but there are likely buyers waiting in here. And once this thing gets cessation of the trend, once one of the TPOs gets above a previous, then you're going to have all the shorts that went short intraday today, which are all weak hands, by the way, getting squeezed on the way back up. So for now, momentum down, and we're not going to fight momentum, but I think the market's getting close to running out of steam and reversing. So I'm going to stick around for a few more minutes and see if it happens here a few minutes after printing the E. All right, folks, there you have it. The cessation of the trend. So as we discussed earlier, if they wanted to keep the momentum going lower, they should have been able to spend more time and bring in more volume below yesterday's range. The fact that we stayed inside yesterday's range meant we didn't have new sellers down there. So this is cessation of the trend. It increases the odds the momentum is over to the downside. Now, here's where it gets tricky. And of course it does, because of course you were watching the stream in the first 5 minutes today when I explained this. It's going to be a tricky, tricky day. What I was thinking was going to happen was that we would poke below yesterday's low, reverse up out of there with a V-shaped reversal. But the fact that we just created the poor low at the low of the day tells me that V-shape is less likely. So now my guess for what we're looking at here is we're probably going to rotate around the lower end of yesterday's range for a few hours. Okay, so we may start trending, we may get cessation of the new trend, whatever. The point is we're going to spend some time going sideways down here at the lower end of the range, and then later on in the day, likely reverse back up, maybe in a few hours from now. But it seems like they want to spend as much time as they can grinding around yesterday's low before they make, that move back up towards the open, as opposed to the V shape, which I was expecting. So I would say from here on out, this has become too messy to sit and watch in real time. So I will wish you all the very best, and I look forward to seeing you on Monday morning. Have a great weekend, everyone. Enjoy your Thanksgiving. Spend time with your loved ones. Tell them how grateful you are to have them in their life, just like I am grateful to have all of you. You know I love you. You know I appreciate you. We'll see you.